Hello and welcome to today's more important analysis videos on Tuesday the 29th of November with me, Richard Perry, market analyst at Handtech Markets. We've got a fairly sort of mixed open to the European markets, nothing too significant in terms of direction on the equities, slightly lower early on, but they've just unwound that as we're sort of moving into sort of the second hour of the session. But it's interesting to see that we have got the dollar, which is just clawing back a little bit of the losses that it had yesterday. It's been down for the last few days actually on the dollar index, but bounced from that support at 165, and that's continued to hold on to that support. Now that is interesting, as it comes amid a little bit of an uptick on Treasury yields. The 2-year just ticking back higher again, the 10-year as well, trading at around the high of the day on the Treasury yields. So that generally has been, or that would be supportive for the dollar. So that is certainly helping the dollar to outperform across the forex majors. Now, the other key factor at play today is the oil price, and the OPEC meetings are still going on. The main meeting is on Wednesday, tomorrow, but these meetings that sort of try to thrash out potential moves towards an agreement on how they're going to cut production levels, or if they actually end up cutting production levels at all, are ongoing, and it comes ahead of this big meeting tomorrow. Now, it would appear that Russia is not necessarily going to take part at the moment. Certainly hasn't suggested that it will, and then it sort of comes down to the main players, sort of the Saudis, Iran and Iraq, to sort of come to an agreement as to how exactly they should cut production levels, if at all, because obviously Iran is still trying to increase production levels after those sanctions. At least back towards 4 million barrels a day, currently around 3.7, I believe, something like that. So in the politics of this, and the sort of game of poker, I suppose, that they're playing with each other in terms of how they're going to come to that agreement, if at all, it will be the significant driver of the oil price. So that is a key factor for today. Now, in terms of what we're looking forward to on the economic calendar, got quite a lot actually today. We've got German inflation first. You get all these German states reporting inflation, and then the main countrywide inflation data is at 1 o'clock, if I can find it. There we go. 0.8 is the expectation there for the year on year. So that's basically in line with where we've been. And then we're looking out for the US data. So we've got GDP at 130. 3% is the expectation for the second reading. I don't know why I'm showing you this chart, because Reuters data, for some annoying reason, gives historic data for the second reading of last quarter rather than the final reading. The final reading of last quarter was 2.9, so that would be a mild improvement. First reading on this quarter was 2.9%, so that is 130 there for that reading. And then we're looking at the Case-Shiller home price index improving to 5.2%. So again, that's sort of just ticking slightly higher. And then finally, we've got consumer confidence at 3 o'clock, which is expected to be 101.2. So again, ticking back higher again. So some generally dollar supportive data, I think, what we can expect today. So what about my chart of the day, which is silver? Now, silver has been under pressure, selling away, but both silver and gold tend to sort of move around with each other. Silver tends to be more reactive though than gold, and this improvement that we saw, this little technical rally that we saw in silver with this bullish engulfing candle, so really started to pick up on yesterday again. Sort of that confirmation move yesterday as a bull candle. So the technical improvement in silver is much more advanced than it is on gold. You got the support at 1614, which has been tested a couple of times and held, but yesterday's high came underneath the 1689 level. 1686 was yesterday's high, so it seems to be that's a support at 1614, resistance at 1689, and you'd look at these momentum indicators, you say, well, generally speaking, it's trying to pick up, trying to turn higher. You'd want to see the stochastics crossing above 20 to really suggest that the market is improving. The RSI is slightly improving. I'd say it's nothing really significant yet, but I think yes, this candle that we've got developing today has certainly not helped that, and sort of dropped away. It's starting to actually go below, although it's just rebounded from it, 1644. So that is your general support from yesterday's reaction low, really. And if you break below that, then you could well see you back at 1614 again. So 1644 is your key level, I believe, today, that you need to watch out for the near-term perspective. And look at this RSI, you'd say, well, that's dropping back to below 40, the MACD lines are falling, stochastics falling. It doesn't look all that great for that 1644 support, but that does need to hold, and at the moment the initial test basically held, didn't it, 1642. But a consistent move below 1640, for example, would probably now start to really put the pressure back onto the downside again. You could actually put a pivot at 1640, or these highs, a few lows there. So 1640, I think, would be your confirmation move of that deterioration in the outlook. But generally speaking, gold and silver tend to move in line with each other, but just silver tends to be more reactive. Just as we speak, silver is down more than gold, so again tends to be more reactive whichever way it's moving. So I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.